What's up guys, welcome back to another video live. This is awesome. So comment below in the chat if you're joining me live, I would appreciate. Today I want to talk to you about high quality trades, high quality forex trades, how I look for them every week, what I do, what I look at and stuff. We'll go through some charts, and for this week I've made it short, which means I'll cover only the pairs that are at some levels. The pairs I follow that are not at levels will not cover them. I'll save your time to make this easier for you. So comment in the chat if you're watching me live. Comment below if you're watching the replay. Also, let me know if you're watching the replay. I would appreciate a lot. And we'll get started with that in just a minute. So when have people joining us, we'll get started with that, which is going to be awesome. So that's fantastic. Great. Cool. You guys comment below in the chat if you're watching me live. I would appreciate. And we'll get started in just a minute. That's going to be epic once again. Here's like with 7:30 a.m. in Mexico, 7:44 a.m. So perfect time to do the review. And you must always do your review before you start the training week. That's like essential, right? So crucial point. Awesome. I think I should be fine. Give me a second to check the sound. This is like the awkward part of the live event. You just have to check everything's fine. Otherwise, it's not that good and it's not that fine. So part of that reality. Awesome, guys. See you guys are joining me live, which is awesome. So I want to hear from you in the chat for sure, and I want to make sure the sound's working fine. So you let me know if there's any problem with the sound. Well, which you couldn't hear, but let's do that. Perfect. Jay, what's up? All good? Wonderful. So I'm gonna keep this open over here because I want to have a look at the chat on my cell phone. And if you guys have any question at any time, just comment below in the chat. I'll answer your question for sure. And like I said, I want to go through the chart, but only the pairs at visual levels. And by the way, if you guys have any question, any doubt about what I trade, my trading strategy is going to be linked below in the description. So basically, I did a whole video a couple of weeks back explaining all the rules and details, everything you have to look for. So if you doubt kind of what's in this video, what I trade, I'll just go quickly through the process now of what I trade, but basically you can watch this video for more information. I look for a couple of things, and it all starts with the context, right? The zones in the market. So I first identify the context, where price is at in accordance to the market phase, a principle developed by Stan Weinstein, but you don't have to learn the theory and stuff. And then I look for zones. So where's price in those zones? So if we're sideways, that's usually when I trade the most. If we're trending, I don't trade that much. So that's the second part, the zones. The third part is about price action. So what is price doing within the range, and what setup do we have? What candlestick setup? What candlestick pattern do we have in the market? Okay, that's the third thing for me. Fourth thing is about indicators. And so I look for, I'm really a big fan of the Bollinger Band. Okay, that's what I look for the most. And so that's the fourth thing. And the fifth thing is about, well, basically how you enter. So I have a couple of rules for that to make it more reliable. And that makes a big difference. I was speaking to a guy this week who was trading the same thing I trade, but with different kind of entry rules. So he would enter, so two things. I think first he would enter like right when the candlestick close. And I usually enter like past, so beyond the high or the low. And just that makes a big difference. Just that can improve a lot the win rate. And you just get a lot more out of it, right? So if you do things wrong, if you shortcut a little bit, things won't work out. But if you do them right, they will work out well, okay? So that's really important. And the other thing is this guy was doing different, is he had a different definition of engulfing candles, okay? So I look at a complete engulfing. For me, a good engulfing is basically price closing beyond the high or beyond the low. Okay, for a short trade beyond the low, and we'll get some examples soon. But closing beyond the high, some people look only at the close, and to me that's not really reliable from what I've seen. Could be good for you, but not for me. Okay, so just want to make it clear, and that's gonna be the start of this live. So let's do that. Awesome. And guys, comment below in the chat if you're watching me live, of course. And by the way, one last thing before we start, I'm gonna do a free training on Wednesday. So if you want to sign up, link is below. This is gonna be only this Wednesday, so no follow-up events, only one time. So if you want to sign up, the link is below. It's free. and I'll teach you how to see your first profitable year. Okay, so that's a really big topic. So if you want to learn more about that, the 6-step process, link below for that, it's totally free. And I'll teach you a lot of really good stuff. So that's awesome. Let's get on the chart. So first pair I'll look at. Sorry for that voice. It's the cold and stuff. Yeah. So first pair I'll look at AUD-CAD. AUD-CAD, we talked about this pair a couple of times, and last week I flagged it. Okay, on my trading view over here, the pair was flagged because it's at a major level. Well, it's coming close to a major level. Okay, the level that we look for is the one at 0.97. Okay, so I've been looking at that for some time, and our price is like really close to it. Okay, and I want to show you guys first kind of what I would look for the market phase. Basically, what I do is I look for where price is at within the whole range, within what kind of what's happening. Okay, and so what I'll do is I'll go usually on the weekly chart. I'll look for where the boundaries, and we did videos on that in the past. So I won't go through everything again, but basically you look for these highs and lows. Okay, and these, like, you never put line first. You always look for what price doing first. That's the first step. So if price is like within a range, you identify a range, and then after that you place some line for your support and resistance areas. Okay, so here we can clearly see that price multiple times bounced at this level, 0.92, and at this top level, okay, 1.03. In between, it's kind of intermediate zone. Okay, they're not major zones, but they're still pretty important because we see it's on the weekly chart, still pretty big. So what you'll do then is that you go on these, you put these lines at other highs and lows where kind of price touches in reverse, and we'll see we have one at here, so 1, okay, that's a pretty strong one, and then here at 0.97 where price kind of pushed through here, came back, retested, came back down, pushed above, retested again, above, retested again, above, retested, and break down. Now it's coming back to retest the level. Okay, so really good level in my opinion. Even though it's one like in between the range, for me that's really, really reliable. That's really important. So now price getting close to the level. So here's what you do. You look for reversal sign that price is gonna finish the retracement when it does to the level. Okay, and that's how you look for things. So basically what I would do is I would go on lower time frame because I never trade a weekly chart. That's too boring for me. I would trade lower time frame like the 4-hour chart, the 1-hour chart, and then that's where you look for your trade setup. Okay, and I want to show you. Actually, we had a pretty good trade on this last week. Okay, this was last week on the 21st. Yeah, last week for sure. So this is I think early in the week. I'm not sure which day exactly, but I did take this trade, and basically this was flagged to me earlier. So price was close, and this is not like we don't look exactly for price being at the number exactly. It has to be close, but when it's getting close, that's why I flag it early. Okay, so I flagged it even before we get to 0.97, right? Because this is not reached yet, but you can still take trades. It's still a sign that price might reverse early, might reverse a little bit late. That's fine. That's part of the process. So here's what you'll see. Price pushed above near 0.97. We're at like 96.6 something. Okay, and that's pretty close. That's like 40 pip of difference. Okay, so basically my setup, which I told you guys about, is we look for two things: a break of the Bollinger Band. Well, so we'll just go back in steps. We'll look for three things: the level, that's really important, the first thing. Second thing is the engulfing candle, okay, which we have over here, beyond the low, closing beyond the low. The low is right here for this one, and this is like kind of basically a doji, okay, so kind of with no body or almost no body. So that's valid for me. And then the next is an engulfing candle, so that's valid. That's my setup right there. And then the third thing is we look for a break of the Bollinger Band, which we had over here with two candlesticks. If only one breaks out, I found it's less reliable. If two breaks out, if two candlesticks break out, then it's it's pretty reliable in my opinion. Okay, when you combine all the factors, this is how pretty much in the snapshot you find high quality trades. Okay, and your trade setup are going to be better with that. So the way I work this is I turn below the low, put my stop loss above the high, and I do reward to risk of 3-1 on this. So let me just put this right here, short position. Okay, so below the low. 5 pip below the low is kind of a good rule of thumb. Stop loss above the high, both pips above the high. And then you look for 3 to 1 of reward to risk. Okay. So around, well, it's a bit picky, around here. Okay. And then, so what I would do basically with this, I would take partial profit at 1 to 1, because I come in with the assumption that we never know how far price will go. Could go 100 pip, 200 pip, 400 pip, doesn't matter. Okay, we never know exactly. So that's why I take partial profit. So I would take partial profits at 1 to 1, which means I take 2 trades, close one when we get over here, so it will be a different take profit, and then the other one at 3 to 1, so here. Okay, so that was like early in the week, I believe. Yeah, so one day later we really should take profit. Okay, pretty simple trade. And then I've shared with you guys before, but here we had another trade set up, okay, a little bit after. And although, like, the reason why I would not take this second trade is because, well, first of all, we had the first one, but even after the first trade, you can still trade. You can still take other trades in the same direction. But keep in mind that this one here isn't engulfing like the other one, breaks outside the Bollinger Band. But there's another rule we forget to add, and I forget to tell you, and it's kind of part of it anyway. But the other rule is that if price is going to close, or if you're going to have to enter the trade below the middle band, okay, beyond the middle band of the Bollinger Band, which is right here. If you have to enter below that, then it means that you don't have much room for profit. Okay, so I never enter trades beyond the middle band. Okay, that's just a rule I have. Otherwise, you kind of waste your time, because like price just shoot a little bit below. But then guess what happens? We already reached the lower band of the Bollinger Band, which is like not good. So I would not enter if you have to enter beyond the middle band of the Bollinger Band. Okay, but if price is to kind of engulf over here, then I would still enter. Okay, it's not like beyond the middle band. So that's kind of a rule of thumb again, but that's really crucial too. Okay, so I'll just check your comment quickly on the chat, and awesome. Not sure if my chat is working right, but it seems like there's no comment, which is a good thing, I guess. So guys, let me know comment below if you're watching this live. I would appreciate it. So that's it for AutoCAD. Now price is still near the level. You can still trade that pair and still look for trades. Okay, that's perfectly fine. And that's why I have it flagged. Okay, so I wait for more trades up on this pair at the same level. Could push beyond a little bit. Could reverse right there. So you have to be careful and look. Okay, but keep in mind that you will only take trades if you trade the same I trade. Okay, you could trade different, doesn't matter. But if you do the same thing I do, you'll look for trades only at the top band of the Bollinger Band over here. So here, that means like now, for example, you don't have to watch this pair like every hour. Okay, waste of time, because price is not at the level yet, or at the upper band of the Bollinger Band. Okay, if it's close to it, then you can start to watch more. But this one here on the forward chart is like at the middle band. Okay, so you would have to wait for price to go over here at the top band and show you a good setup. Okay, if you trade reversal, the way I trade. If not, well, it's fine. Trade whatever you want to trade. And here, the same thing. You have to wait for price to hit the upper band and then look for a trade setup. Okay, given the fact that we are at a resistance area right now, at 0.97. Okay, so that's it for the pair. Hope that makes sense. If you have any questions, just comment below and we'll make sure to cover your questions. I want to go to some of the pairs like you see here on the right. Those are the pairs I follow. Okay, and all these ones are not at levels, so I don't care about them. Okay, Euro AUD, we'll have a look at that pair. This one is at a support area and it looks pretty cool, like we have a support forming right now. Okay, so I cannot enter this now. Well, there's 2 minutes left, but after the live I'll enter anyway, if it's a good trade. And keep in mind, I always enter beyond the high. Okay, so basically you would put an entry order here above the high, stop loss below the low, and you want to risk. Okay, and if it's not triggered on the next candlestick, these trades should happen pretty fast. Okay, so if it's not triggered on the next candlestick, I would not trade. As simple as that. Okay, but keep in mind here, it's not only about the Bollinger Band thing, and we said like before, it's about combining 3 factors. So the zone, which is combined with the market phase anyway, and then the engulfing candle, second thing, and then the break of the Bollinger Band. Okay, so 3 things that we combine. And this looks like it's promising, but we'll see what happens after, and if we go beyond the high too. So, and again, this is not trade advice. Like, you do whatever you do. That's your job as a trader, to follow your plan. I'm just showing what I do, and hopefully I can help out with what you do. And I don't know, you use it for whatever you want. But I'm not like telling you to take the trade at all. So you do whatever you want to do. Okay. So quick disclaimer here, and this is a pretty good pair. Okay, so at a major level at 1.57, where we bounced a few times in the past, and price coming back there now. So that's awesome. EuroCAD is at a support area. To this one we said, and I'll repeat this like because we said this many weeks ago, but basically if price gonna break down of this low over here, because price made the low at the support area with a pretty big wick. Let me just zoom in so you guys can see clearly, or we'll just go higher. There we go. Okay, so this wick right there, if price gonna break below this wick, then it's a sign that the support is going to be broken, and we'll stop looking for bullish trades. Now I still look for bullish trades in this pair because it's still at the support. The support still hold, and that's what you look for. That's why I look for bullish sit up. Now on the lower time frame, I think we had no trades on this. Okay, so price just went to the lower support there. Didn't do any engulfing candle, any sit up with the Bollinger Band. So that's something we have to wait for. And same thing with the forward chart. Price went here, the new engulfing candle, no trade set up at all, and now we're just pushing back. So that's good, and that's why it's a good thing to have the filter of the Bollinger Band to help us find the right trades, and the good trades are high probability, high quality too. Because if you only look at engulfing candles or only at Bollinger Band, you don't really have this like high quality factor of your trades. It's only going to be partial like confluence on your trades, so that's not good. UGP is not as I didn't flag this one because it's not at a support area at all. It's like kind of between two zones. We had this support here at 0.87, and I think we had no trades on this pair. Actually, I didn't take any trade on this, so we had no trade. And yeah, price just shoot up pretty fast in the right direction. Now it's coming back, but for now it's like between two zones, so I'm not gonna trade that for the next week. Probably not, unless it's like really changing majorly, but I doubt so. Okay. Euro USD is another pair that's flagged at a support again. This one, if price breaks this wick over here, I'll stop looking for bullish trades. For now, still trade like I still look for bullish trades. Okay, the wick is at 1.12 pretty much, and that's the lower support. Okay, below that, it's like not a support anymore, in my opinion. So in the meantime, you can look for trades on the lower time frames, and we had no trades up on this like for a while, so I didn't take any trade. Here's a lower probability setup because of the fact that it's a breakable Bollinger Band, but only with one candlestick. Because only this candlestick here broke outside the Bollinger Band. The other one didn't break. Okay, as you can see, it's kind of hard to see, but didn't break. Okay, you can see it pretty clearly. And this one is not breaking, so I won't take this trade. Okay, even though it went above, for me that can work out sometimes, but overall it's not gonna work out great. It's gonna be like maybe losing money, maybe breaking even, but not good. So I avoid these trades. It's just like kind of the 80-20 rule. So these trades don't work out well. So that's it for your USD, but still for bullish setup on this pair. GBP-CHF, we'll have a look at that if it can load. GBP-CHF is kind of close to the level, although it pushed below a little bit. But basically at this zone you look for bearish trades. Okay, so price reversed there a few times in the past. So we had this range before. Okay, as you can see here on the weekly chart. Just draw something. Okay, so this range right here. Price was ranging there for some time, broke above, came back to retest this high of the range, came back to retest again, broke down, and now it's coming back to retest again the high of the previous range. Okay, right here at 1.30, which is also a round number, turns out, which is pretty good. So you look for bearish trades there. Now it's kind of past the zone a little bit, but I still look for trades. And the reason is that price I see on the 60-minute chart and the forward chart too is near the high of the Bollinger Band. So near a place where we could look for trade setup based on the zone. and I expect price to kind of probably go down. That's why I look for trades still here, and that is it for this pair. Okay, so that, hope that makes sense. It's kind of explained easily and simply, but hope that's clear for you guys. I'll get you. So this is a big question from Philip. I'll get to that in a minute. Philip asked, why don't you look at structure to determine your take profit? I love that question, so we'll get to that in just a minute. Let's just finish with those pairs first. Awesome. GP and ZD, same thing at a support area, and we had no trades on this. Okay, same thing here. The same setup as before, but didn't really break the lower band on this pair. Okay, so I would not take that trade. So it's a really cool setup, engulfing candle, break off the bullish band with one candlestick at the support area, but we didn't break the bullish band on the second candlestick, the engulfing candle. Okay, so I would not take this trade over here. Well, that's the X. Okay, so I want to take this. Okay, but you could take it if you find that some pairs might work out great with that. You have to do the stats, do the numbers, but I didn't really look into it because I found a lot of pairs that don't work out well with that technique of only one candlestick breaking outside. That's why I don't take any trades on that. But if you want to look at it and go further into that, you could do it. Okay, it's up to you to do your research, of course. But looking for bullish trades on this pair. GPUSD is also a pair I look for. Kind of a, well, this is different. This is a pair that broke down the level, okay, at 1.31, came back to retest, went down a little bit, but now kind of consolidating a little bit. So if you look for breakout trades, okay, this is a really good place to do it. So as you can see, price was kind of having regular candlestick for some time, and now the candlesticks are getting really small, okay, really tiny over here. So if you are a breakout trader, you look for a breakdown on that pair, that would be actually pretty good. Okay, I don't trade breakout personally, but what I would do here is, instead of looking for breakouts, well, just the first case, if you look for breakouts, right, you would look at the range you have on this pair. You just try to zoom out a little bit. So if you are a breakout trader, okay, the way you would look at this, you would look at what price did here after it reversed from that level. Did the kind of a range. Okay, so you put some lines on your range. In that case, I would do here's a tool I had, this one over here. Okay, in this case, I would personally do kind of a range like this. Okay, just kind of getting a upward kind of small trend, and then I would look for a breakout of this. Okay, to the downside, I would only trade if we break to the downside, because of the fact that price is at a resistance area now. Okay, this is in accordance with the market phase in the context. But I will not take bullish trades. I will not take breakout of the range here above, because it's like not like it's kind of against the overall picture of the market. Okay, but I don't trade breakouts, so I won't talk about that more. What I would look for now is I look for these extreme points, so price getting to the high of the Bollinger Band, forming the engulfing candle pattern, of course, and that will make it for a pretty good trade. Okay, on the forward chart or the 1 hour chart. And so far here price made a setup, but here for me this is not significant, okay, at all. So the other thing that I talk about a lot sometimes, and it's going to be discussed also in my other video, the other video linked below, is the fact that if like it has to be an engulfing candle, which means that engulfing candle is supposed to be bigger than the other candlestick. Like here's just a little bit bigger, so, and the candlestick are small. So I would not consider this as engulfing at all, okay? For me, that's not valid. But could be valid for you, and even if you were to take the trade, I would still count it as like, it's fine, so like kind of a good trade, not that good. But you wouldn't like blow up your account on that trade, for sure. So if you take this, it's not a bad thing, because it could work out some time, but just keep in mind that engulfing candle, by definition, have to be bigger than the previous candlesticks, okay? That's the ideal case, of course. So that's it for GPUSD at a resistance area, doing a retracement. The last pair I'll look at, which is the only one that's on now, is USDJPY, this pair is getting at 114 a resistance area, and that looks pretty good. Okay, And I want to point out your attention again on this thing over here. This is the setup I might take, of course, it's a losing setup. But again, if you have to like, and there's no like, I just want to make clear that there's no clear answer. It's not like to take the trade or not. You could take the trade, okay? And it would be, I actually took this trade. It would be a losing trade. This is a losing trade, okay? I was stopped out in this last week. And there's no clear rule. But keep in mind that if you really want to take only high quality trades, you would filter out by like whether it's a big engulfing candle or not. If it's big enough and bigger than the last candlestick, then you would enter the trade. If it's not, you would skip the trade, okay? But here in this case, it's not a big candlestick. So I still took this trade because sometimes I don't go exactly with the rules I have. It happens, okay? And I would basically on this like enter like I told you guys before, enter below the low. So just put this over here, short thing. Enter below the low, 5 pips, a plus above the high, and what you risk of 2 to 1. Okay. The good thing about these trades is the fact that they have a really small stop loss compared to the other ones. So your probability of price going in a reduction and hitting the take profit is pretty high. Okay. But it comes down with the fact that it's not as strong as the other trades, so you're more likely to be stopped out. Okay, so you have to see if you want to take these trades. I take them sometimes only if I kind of feel like it. And I know it's not that clear. And people also sometimes you have to respect your plan all the time. It's true, but keep in mind that you might not always like have clear rules for that. So for me, I take them when I like to take them, when it's convenient to take them, but if not, I won't take them. And it might be good trades sometimes, bad trades, losing trade all the time. Up to you to kind of see if you want to take those trades, which are a little bit low probability, but they still work out sometimes. Okay, so I took this trade, stopped out here, and that was a loss of like 1% of my account. So that's it for the trade. And actually, I'll keep this because I didn't. Yeah, awesome. So you guys, if you have any questions, comment below in the chat. I'll make sure to answer your question for some time. Let me just get back to this. And let's get to your question. So I want to ask you a question, Philip. This is really awesome. Philip was asking, why don't you look at the structure to determine your take profit? This is a really, really good question. And basically, I come in with the assumption that the market can do whatever it wants to do, and we can never predict. Even when you have the structure and stuff in place, we can never really predict what the price is going to do, okay? So based on that, for me, it's a question of like, you cannot know how far the market will go. So I just put my take profit with numbers that I've tested before that work out well. And then I just wait. Could be stopped out, could not be stopped out. Doesn't matter. Could go beyond, could go. It doesn't matter. The point is that I go with these numbers because they work out well in the back test, in the back testing. And then I just go with probabilities that it's going to work out. And I feel better because I don't have to kind of watch a perfect place to take my profit. And it's one less decision to make. So if you have to kind of find your trades, then find your take profits like one more step, which you could probably mess up and do wrong. It happens. We all make mistakes. So that's why I don't do it. Okay, that could be bad a little bit. Okay, so that's kind of what I come in with. So one less decision, and it's simple, and it's back tested, and it works out well. So it's kind of what I do. Hope that answers your question, Philip. Okay, awesome. Tobias Trading says, yo, Etienne, love your podcast with Mendium Psychology. Yeah, she's really good at that, for sure. So much value. Awesome. Yeah, totally right. Philip says, maybe use ATR to determine the required size for engulfing candles. Yeah, kind of that. So what I do is for me, it's more simple than that. You could use the ATR and find out if it's like bigger. Well, it's kind of the same thing I do. So what I do is I look for basically, I want the engulfing candle to be ideally bigger than the last kind of 5 candlesticks. Okay, that's kind of my rule of thumb. And it's kind of, so if you were to take in ATR of 5 basically, and look for something bigger than that, that's the same thing. Okay. Some people might do more, like 21 days for the ATR, 14 days. I don't do that. For me, 5 is enough. Okay. So, yeah. But it has to be bigger than like the bigger ones of past 5 days. I hope that's clear, but that makes sense to me. So whatever. Good morning, Farah Osman. It's awesome. Oh, great question. So Sancho asked, when you consider that the trend has changed. I discussed that with the guy last week here in Merida, Mexico. I was doing kind of a small trader meetup with people here, and someone asked me this. So how do you know when the change changed? I said, well, it's simple. There's two ways to do it. Okay. The first way is like, and people talk about this online. I think anyway. So first way is about kind of you look at how price behaves, the move. So if you have like a big uptrend, then a small pullback, and then a big uptrend, then a small pullback, it's a strong trend, right? If you have a moderate uptrend, moderate like move up, then a big pullback, moderate move up, it means that the trend's kind of dying a little bit. And if you have a small move up and then a big pullback, or like an equal pullback, means that the trend died pretty much. Okay, that's really cool in theory. That's really nice to talk about that. Really good way to know if trend works. But for me, I'm really bad at that. Okay, so I will always get it wrong most of the time. Okay, it's really easy to talk about and share and tell in theory, but in practice, oh man, that's hard to apply. So what I do for me is I only look. This is the second way. You only look at the highs and lows. So if price breaks a high, it's an uptrend. If price breaks a low, it's a downtrend. Okay. So if we are in an uptrend and price breaks below the low of the pullback, then it's not an uptrend anymore. It's maybe a downtrend, maybe sideways. Because that's how it changes for me. And that's basically what I do. So that's the easiest way for me I found to know when the trend changed. But you could do it wrong. Okay. So awesome. Sancho says cool. Perfect. Hope that helped. Philip says, do you ever let a portion of your trade run? Only to 3 to 1. Okay, so I don't go beyond that. I could, that's something I could explore, to be honest, but I didn't really look into it. I'm more like, now my priority is more like automation. How can I automate more to not have to look at the chart too much? And that's pretty much why we have the trading assistant, which I didn't promote at all today, but whatever, if you guys want to check it out on the website. The trading assistant send me alerts for my trades, and I can know kind of when to enter a trade, when there's a step in the market. Okay, so that's really powerful. So I'm more focused to that than making things optimal now. But in the training on Wednesday, which is linked below for free, I'll talk about that. Kind of when you should look for to optimize the strategy in order to trade. That's a really good topic to talk about. So sign up, it's free. And it's gonna be linked below. Do you use any oscillators for momentum or trend strength? I found looking for divergence to be profitable. Yeah, you could do that. I don't do it because I look for price action. Thank you, Alejandro. It's awesome. Putting the link there. It's cool. I appreciate. So yeah, I don't use any oscillator. The only thing I used to trade back a few years, well, like a year ago, is I used to trade breakouts too with the RSI. There's a video on that if you search on my channel, breakout RSI. You'll find a video on that for sure. Basically, I was looking for breakouts trade with the RSI. That worked out well. Okay, so but now I don't do it anymore. Mainly because of the fact that I like to use Bonjour Band and price action. They kind of combine well. If you only look at Bonjour Band, then yeah, maybe the RSI or any oscillator might work out well. But for me, I didn't find any way to make it better with that. So, yeah. EMAs, yeah, EMAs could work out well, but I don't use any EMAs now. Philip says price alerts work well. Also, yeah, it's true. The only thing I don't like about price alerts is that they're very too generic, very too simple, and you cannot really know like what is happening on the chart. So, and here's the thing that used to kind of frustrate me a lot. It's the fact that I would try to set up alert in my chart, right? They would work out well, but you can usually only set an alert to like a price level. So I'll put an alert like at 1.315 on my chart, but then you get alerted there. But then what you have to do, you have to wait for your setup. You can't switch to form. You have to wait for your Bonjour Band to align and stuff. That's hard. That's kind of a mess. So, and I know TradingView on like sites like TradingView, you can put alerts for a break of a bullish band, for example, things like that. But I'm not sure you can combine things together, and I'm not sure that, well, when you get the alert, first thing you have to get it on your computer. As it's gonna kind of do in really annoying sound on your computer when you have your trading view open. Or it's gonna send you maybe an email, which for me doesn't work well. I get tons of emails, and I don't want to have like an alert for every email I get. Okay, that would be like really, really frustrating. So that's why we kind of combine things to. I think you're another one. Love that. That's why I kind of combine things of so all this together, which is, and I'll show you guys a good example. So Etienne says should have an example. I'll show you guys. So, and I have it open right there. Let me just try to make this full screen so you guys can see better. So here's kind of what I get from my alerts for trades. Okay, we have one we talked about. Was it on Euro AUD? Yeah, that was the one we talked about. So basically, I get a screenshot, which means I can look at the chart, and this is like based for my setup. Okay, we can customize this for you if you want. So we have a team for that, and then this is based on my setup. Okay, so not on the price level, not on whether or not price just break an indicator. It's based on like all these things: the engulfing candle, the Bollinger Band, and everything combined. Okay. The only thing I look for now is the level. If this aligns with the level, like we talked about before, which here it does, then I'll take the trade. Okay, and then that means that also we have all the rules here, all the parameters to take the trade. Okay, so this is based on entry here, stop loss there, take profit 1 at 1 to 1, take profit 2 at 3 to 1, and everything's there. And also expiry date. So if price doesn't break past the high at this date, or if the entry, I should say, is not triggered at this date, we'll cancel the order. Okay, so this is like in 4 hours pretty much. Okay, because it's a 4-hour chart, and that's how it works. So pretty simple, and that's why I love these alerts that are custom for that. Okay, so we have a bunch of different things, and here I believe we have also a group for the trading assistant based on the setup for different pairs. Okay, so that's kind of what we get, and that's what I use a lot in my trading. Okay, so we can customize this for you if you want, and I'm not selling it at all. It's just I share kind of what I use, what I look for. We can customize this for your rules, or you can use what I use if you want. It's up to you. Philip says, do you adjust the amount of risk you decide to put on a trade depending on if you are trading with the trend on the higher time frame? No, I don't. I always have the same risk because I rarely trade with trends. I trade with sideways market. So very rarely will I trade in a trend. And if I do, it's going to be just the same. So I usually risk 1% per trade because I'm a little bit risk averse, and my goal is not to kind of make it exponential return and lose it all. My goal is to kind of grow steadily. Okay, that's why I risk 1% per trade, and it works out well. And the maximum drawdown I ever got with this was like 10%. Or 14% a while back, but that was because I was doing some random stuff, and that was like my first big drawdown. Okay, so 10% is usually like the biggest I can have for drawdown. So hope that makes sense, guys. And this is overall sign up for training that's going to take place on Wednesday if you want. It's going to be awesome. I'm just like excited about this one a lot, and I'll just share with you like the 6th step to be able to have your first profitable year, a pretty big jump if you're not there yet. And that's going to be pretty awesome. Mohammed says, do you trade earning reports? I heard it's very profitable, winning rates pretty high. Yeah, I don't trade it because I guess it will work out better for stocks than Forex. But you can look at news, and I don't really trade news because of the fact that they're too volatile. You can never know what's going to happen. And again, this comes back to the fact that I talk about. You never know basically what the market will do. You can have a good news, the market will go down. You can have a bad news, the market will go up. You never know in advance. So that's why you kind of have to, it's like unpredictable. So you could trade it, you could work out, you could not trade it. But yeah, it works out great for fast trades. You just have to learn how to do it. And you have to be willing to sit there and look at the chart and trade, which I don't like to do. I prefer to travel and stuff and do things outside. And only take the trades when I have to take the trades. Okay, that's kind of my philosophy on that. So 40 minutes in, guys. Hope that makes sense. Comment below in the comment box with your questions, and hope you liked it. Give it a like if you enjoyed the video today, and I'll catch you back here tomorrow, I believe. We'll try. We'll see, because I'm traveling tomorrow, so it's gonna be pretty epic. Thanks, I appreciate it, and I'll catch you back here in a few days. All right, ciao.